January has come and gone, and with it we had a broad-based market correction across many of the leading global indices. Investors are now wondering what happens from here. We're of course into February, and February brings with it earnings. Earnings season is that time to get insights into companies' progress, and also some thoughts about what the pathway up ahead might look like. So today we're going to explore 4 companies that are stocks to watch for the month of February up ahead on the ASX. Each of these are coming from a range of sectors, from resources to technology or the biotech and healthcare space. So as we explore these companies, I'm keen to know your thoughts on it all. Each of them have either had a range of catalysts previously in the month of January and look well positioned, or they've got some upcoming catalysts in this month of February. If you do enjoy this video, don't forget to hit the like button. If you're new here, welcome. Make sure you've subscribed and turn your bell notifications on. And of course, as we dive into it, the standard reminder, I'm not a financial advisor, I'm just a bloke on the internet who loves talking about stocks. These companies are not buy recommendations, they all just look interestingly positioned as we look forward to the month of February. Let us know your thoughts on it all, drop in a comment below, and hope you enjoy the video. So stock number 1. It would not make sense for us to start in any other place other than to discuss Block, formerly known as Square. Block has arrived on the ASX under the ticker code ASX SQ2. Of course, after taking over Afterpay with the largest acquisition in Australian capital markets history, there's a lot of excitement to see what Block's arrival on the ASX means. It's arriving with a significantly large scale. At the time of the initial transaction, it was in one of the top 10 largest ASX companies, and of course, it brings with it a significant global technology pedigree. Founded by Jack Dorsey, there's a lot of excitement about what this now new acquisition could bring to the market, and also what it means having a huge global player on the ASX. It is significantly the largest technology player, and as mentioned, it's in and around that top 10 companies on the entire ASX boards now. So investors are excited, and this also ties into some of the other top blue chip discussions that we'll have later on in this video, so stay tuned for that. I guess talking about the opportunity for Block, of course we know that they have 2 key components to their offering in its current form. On one side is the sellers ecosystem, which of course started with their terminals and their point of sale, the broader platform that they can offer, now expanding into financing and a range of other opportunities as well. And then of course cash apps, which is focused on the individual consumers, and there's a significant opportunity there. There's obviously a range of different integrations, as well as potential synergies for them to unlock. But of course, all of these could be facilitated and really further enabled by an application like Afterpay that can provide buy now, pay later, and really helps Block with its end goal, which is to provide and facilitate direct commerce between sellers and retailers, and then individual consumers on the other side. And so of course, that all feeds into the Afterpay acquisition. As we know, Afterpay has got a huge global base. Of course, they started in Australia and they've got a large individual consumer and merchant base in Australia, but they've expanded into a range of different regions. And of course, they're now further expanding into Europe as well after some final approvals. So there's some cross-selling opportunities there. Square predominantly was started in the US, but of course they're continuing to expand out more broadly. And as Blocks arrived onto the ASX, they provided their first insight into how this cross-selling could look, with retailers and merchants in Australia being able to potentially provide opportunities to offer the Block platform and the Square retail ecosystem that they can provide, as well as also being able to offer out to Square's cashapp customers Afterpay facilities and BNPL's opportunities there. Of course, we've only had a little bit of data in terms of Block's arrival onto the ASX under the SQ2 ticker code. We can see here it came onto the boards just around that $175 mark. It's traded in and below that $150 mark recently. It is down 15%, but it is worth noting the current backdrop that's trading down. Of course, we have to understand that we're having a bit of an uncertainty, particularly surrounding the technology sector, but the broader market has had a broad-based market correction. The Nasdaq, where of course many of the technology names are housed, is down by 15 and nearly as much as 20% over this past period. The S&P and the ASX benchmark index reached into that correction territory of minus 10% as well. So Block hasn't been immune to that. We know that with rising bond yields, the potential of rising interest rates, and of course the rising discount rates that will ultimately be used, companies like Block that have got a lot of future growth priced into their share price have had their valuations come into question. So investors will be interested to see what happens from here. Of course, the SQ2 ticker code is going to trail and track the underlying Block share price over in the US markets overnight. But it's a significant announcement, it's a significant arrival, and it's great to have a leading technology name on the ASX boards now. Stock number 2. Of course, while we're discussing capital markets activity and an arrival on the Australian boards, it makes sense for us to talk about BHP. Now, it's not a new arrival. BHP is, of course, already one of the leading blue chips as a significant global player in the resources space. But there is a unification that has been playing out over this past period, which has really amplified and grown the magnitude of BHP's weighting on the index. And it's also helped to simplify the process. But I think before we discuss the actual playing out of that, it makes sense for us to think back into where BHP is currently positioned. At the back end of 2021, BHP released their climate change or their climate transition action plan. This is a big step forward, but it's really playing out in a broader backdrop as we see ESG focuses from companies around the world. The ESG movement is here and now. There's a lot of discussion about it, and it's no longer good enough to just be discussing it or considering it. Investors and stakeholders want to see action towards this, and this was where BHP's climate transition action plan came into it. It outlined the company's updated approach to fundamentally reducing greenhouse gas emissions. We know that net zero is a focus for 2050 for companies and governments around the world. BHP want to continue to work towards this. And so this is an interesting one because obviously it will have some focus and alignment in terms of where they're investing, where they're spending their time and capital resources moving forward. And so then building on that, the BHP unification. It was really fascinating to see some of the numbers. So what's happened is that BHP were previously under two different company structures. They were incorporated in the UK, was listed on the London Stock Exchange. And then of course the BHP Group, which was listed on the ASX. BHP Group previously had around about a 6% weighting on the benchmark index. Once this unification has been completed, the consolidated group is actually going to be about 10% of the benchmark index, which speaks to the magnitude and the scale that BHP really will have. If you can see here the strategic rationale behind it, BHP will now be unified with one company, one legal structure, and a single share register. It makes it simpler and it will enable them to be more agile, efficient, and more flexible moving forward. And obviously this has flow-on effects as well to potential capital pools and also different opportunities that may unlock on the M&A front. So it's going to be really interesting to see what flows out of this. And then the question might be BHP's future. Where do they go from here? We know traditionally the core competencies of BHP are centered around iron ore, then of course coal and copper. They've recently divested out of their BHP petroleum business to Woodside. And it's quite interesting to note that BHP really highlighted that they're aiming to grow their exposure to future-facing commodities in world-class assets. Of course, there's been discussion surrounding potash. And on the other side as well, we know that there was a bit of a dance surrounding FMG as well, with BHP and FMG both looking at Noront Resources, the nickel miner over in Canada. But I think what's really interesting and a potential thought for the future in this space is we know that BHP, Rio Tinto, FMG, these companies have got significant cash flow coming through. They've got war chests, really strong balance sheets after the iron ore boom over this past period. And so it's likely that we're going to see further M&A activity, particularly in some of these future-facing commodities. We saw Rio Tinto previously have their $800 million bid for the Rincon lithium project. Of course, we've talked about the nickel opportunity as well, further opportunities in copper too. So it wouldn't be surprising if we see a company like BHP potentially look into these companies in the lithium space. Maybe there's a cobalt play there. Who knows how it looks, but I think this is going to be interesting and investors will be watching this playing out. As mentioned, very keen to hear your thoughts on it all too, so drop in a comment below what your stocks to watch for the month of February are up ahead and which earnings reports you've got your eyes on. The next stock on the list is Weebit Nano. ASX WBT is a company we've talked at length about on the channel previously. If you are interested in Weebit Nano and a bit of an overview into what Weebit do, we've previously interviewed the CEO, Kobe Hanok, on the channel. We'll leave a link to that after this one that you can check out. But overall, Weebit looks interestingly positioned for a couple of factors. Firstly, at the back end of last year, there were a couple of technological developments, most notably the test chips being available, that really caught investors' eyes. But also there's been a range of different factors that have been playing into the Weebit Nano share price and the share register over this past period. First and foremost, they welcomed on institutional investment with major Israeli institutional investors joining the register. There was a capital raise surrounding this at the $2.84 price point. Of course, we know that capital raises traditionally can be suppressive for share prices in the short term, as the market just takes time to digest the capital raise before it then can have another attempt at a next leg upwards. But I think on the other side as well, there was a significant amount of WBT OA options that were coming into expiry at the back end of January. We also know that options expiry can be suppressive in the short term for share prices as well, because often, and not always, but shareholders, if they have both the heads as well as the options, may sometimes look to sell some of the heads or the underlying share price to then have enough capital to fund the exercising for the options. And so with these two different factors playing out, we did see Weebit Nano trading in and around that $2.50 to $3 price point, trading in a sideways trading range. But of course, as these different factors have potentially had the handbrakes taken off, and both of these were, as mentioned, suppressive in nature, but it looks like Weebit's now able to move past these in terms of the short term. It's going to be very interesting to see what the year of 2022 has up ahead. We know they signed their first commercial agreement with Skywater, the US fab, technology transfer underway and qualification moving forward over this next 12 months. So investors will also be looking forward to hearing how any other further commercial agreement discussions are playing out. And I think it's worth noting as well, of course, Weebit are positioned now to begin to commercialize their embedded memory side of the market. They're still looking at that discrete memory side as well. But a piece of news that flowed through over these past few days that investors might have missed, but it was quite a significant one, and it really just speaks to WBT's focus on having innovation at the core, the opportunity they have to continue to innovate with their world-class leadership and management team, and of course the connection they have with the research institute Leti. They are discussing or exploring the opportunity for in-memory energy as a supplemental feature for in-memory computing, which reduces energy use. We know that ReRAM already has low power capabilities, and this is quite a significant opportunity. But as we move to new forms of technology, they become more and more complex. Of course, you want to be able to have the most energy efficient and the most efficient provision of memory that you can towards these products. And so just seeing the opportunity for Weebit to continue to explore new opportunities, new ventures, new ways to innovate and provide ultimate benefit to their end customers, it's going to be fascinating to see what these next few years can bring, particularly with this tight partnership that they do have with Leti. And then the fourth stock to watch is Imugene. ASX IMU, as you can see here, in the quarter 4 of 2021, they had a significant amount of news flow over the quarter. Clinical trial supply agreement with leading global players Merck Germany as well as Pfizer. Oncarlytics research collaboration with Eureka Therapeutics. First patients were dosed for their phase 1 clinical trials of CheckVac, which was a major milestone for the company. FDA IND approval for both Hervax as well as phase 1 clinical trial on the Vaccinia side as well. Further patents approval, and significantly Imugene was added into the ASX 200 benchmark index as well. So investors looking at that would be really able to say, wow, that was a major milestone. Maybe it was time for them to have a bit of a break, maybe spend a bit of a time to rest in January. But that has not happened, and IMU's really blown a lot of investors away with the amount of news flow that they've been bringing to market over this past month as we've kick-started into 2022. And so first up, we can see they've continued to build out their IP portfolio. They've got long-dated patents. This is, of course, important in the biotechnology space, but they've continued to build that out. For CF33, the oncolytic virotherapy, they have the patent granted now in Japan. And on the Hervax side, they continue to build out a robust patent portfolio, further patents granted now in Europe as well as South Korea. They've also continued to grow the team. They've appointed Dr. Stephen Char as the Chief Medical Officer. This is a major appointment, but they've also continued that Roche and Genentech connection that they already have with a range of their current employees, including their leadership team and Leslie Chong, really having that connection with Genentech, and they've continued to build that and really amplify the opportunity they have. And so we can see here they continue to build out their leadership team, bringing in 2 new former Roche and Genentech employees who are experts in the oncology, clinical development space. And of course, this is going to continue to build out the opportunity that they can have to develop out their treatments and build out their platforms, but also with one eye looking forward towards the opportunity of potential commercialization as the science continues to lead towards that direction. Imugene also did start the year with a major tick in terms of funding. They, of course, did a significant capital raise over 2021, but they've further built out their cash chest as well with a research and development tax refund of $6.5 million, which of course is a major one. We know the Australian government's been looking to incentivise investment into the space, and Imugene was able to be a beneficiary of this. And then finally, we can see on the trial update side, Imugene has had some major developments on the PD1 vax stage in terms of the phase 1A that they were running for that. They successfully completed that. They were now looking forward towards a combination therapy. And then they announced recently that they will be having a supply agreement with Roche to help to evaluate that PD1 vax in the next stage of this trial. And of course, this is a significant one because it's just another global name who has, of course, validated the technology. They've evidently done their research and their due diligence, and they're willing to go into partnership with Imugene and look at the opportunities that these treatments could bring. It's been a big month for Imugene. Of course, the share price has had a bit of a sell-off over this past period. It hasn't been immune to the broader market correction that many of the names that we have discussed have experienced. But if the science continues to develop and if they continue to bring out a range of announcements, it will be very fascinating to see what this next period has for ASX IMU. It's an exciting period. We're into earnings season. We've really kickstarted into 2022. January obviously had a bit of volatility and it's likely that that will continue to follow through moving forward, but very excited to see what February and 2022 has in store for us. If you did enjoy the video, don't forget to hit the like button. If you're new here, welcome. We make daily videos each and every day, so make sure you've subscribed, turn your bell notifications on, and you won't miss any of our daily episodes. We'll also leave links up above as well for you to check out some of the deeper dives into some of the companies that we've mentioned on the channel before. Thank you so much for joining us. For now, stay well and happy investing.